What is going on, everyone? I am back today with another video on Thursday, February 19th, 2026, and how I took zero trades today, why I took zero trades today, just a market review, how I avoided this chop, didn't get caught in it, and preserved my capital for the day. So I'm just going to get straight into it. Coming into the day, I was bearish. I've been bearish all week, and at this point, I'm still going to continue being bearish all week. Reason being, how market open looked. Yesterday we respected this daily gap that we had on both assets, hit this daily gap, respected it, rejected it, wicked it, closed back out of it. And overnight, the 4-hour strong close, if you look at the hourly, we manipulated up, manipulated down, or distributed down, inverse this area, came up here, accumulated, manipulated up into this hourly, and started displacing lower again. So this made me very confident in sells, and my targets for the day were this low and this low. This low was yesterday's New York AM session low, and prior to 9:30 market open, it wasn't taken on ES. So what I wanted to see, can I replay, please? What I wanted to see right at 9:30 was for us to leave this low and not take it on either asset. Right now it was free and open and a great draw. And what I wanted to see happen was we had this hourly gap above. It was already taken on ES. However, NQ hasn't really done anything. We haven't strongly distributed from it. We've continued to stay in this accumulation range. And ES hasn't hit any type of PD. I mean, NQ hasn't hit any type of PD rate. So even though ES took that high, NQ hasn't really done anything. And since it is my primary asset that I trade on, I would like to still see it do something. So I wanted for this low to be left and for us to, right at 9:30, go higher and get an inversion. My internal target would have been the fact that we have a relative equal low with this low. And yeah, instead, at market open, we end up coming down, not taking this low on NQ, but we did take it on ES. And at this point, I was still confident in shorts, but it changed what I wanted to see. Now I wouldn't just want to see this high get taken and get a short. Now I would need an internal target. I would need clear structure to build up. That wasn't like one of the scenarios that I drew out for the day. Here, I took a picture right before market open of the 3 scenarios that I drew out. I either wanted this low to be left for us to manipulate higher into the hourly gap and get an inversion, or for us to displace lower at open up a 5-minute gap with the blue, I'm talking about the blue path, open up a 5-minute gap here, leaving this low still intact, manipulating into it, getting inversion and getting a short, or displace through this low, showing that we're not trying to reverse from it, making a relative equal low with the previous day low, build up some structure, take out this high, which would have been like a 5-minute or something, and then get an inversion short towards the previous day low. Now, we did not get that here at all. We displaced lower, and we didn't show that we want to go through this low. We souped it perfectly. As you can see, we wicked below it and closed back above it, or at it, making a wick, showing that this is a rejection. This is not something that we want to displace through and continue going through. And at this point, or at least not go through it immediately. And at this point, what I wanted to see instead was for us to come up, build some type of structure, take out this high and this high. Because yes, this is the hourly gap, but there is this little 1-minute high. Anytime that there is a fair value gap, you should look within that gap, see what else is in there. Like whether there's a 5-minute gap, and make sure that all the liquidity is actually taken inside of the gap. Like if let's say we come up here and like, yes, we hit this hourly gap, but then we make a relative equal high right there with this high. Is that a good short? No. It would be better for us to resweep it and take that high too. If we end up going higher again, then you would not take a short here because you would still want to get these highs to be taken, and then you get your short. So that's kind of what I was looking for now, was this one, build up some type of structure here, maybe open up a 5-minute bullish gap to use as a target, an internal target, or some type of low resistance liquidity or equal lows. So I wanted to see us rebalance it, and we just ended up chopping. Like, we made no internal targets. This is all just choppy price action. Here, there was no inversion, but even if there was no valid entry model for me, but even if there was, it's not something I would have taken. Yes, we took this high that I was talking about, but there is still no internal target. Your target basically would be a low that was already taken on ES, and you're just targeting a low that already swept another low. No internal target in this leg, no nothing. And if you look at ES, this is why you always pay attention to both assets. If you're someone that trades NQ and ES on the side, you use ES for SMTs, you should look at both. As you can see, ES is trading higher, and it is starting to get closer to these highs, this low resistance liquidity. So trying to short here when ES is still here looking to take out these highs is not a good idea. So at this point, what I was waiting for was for us to resweep this high, take out this premium 1 hour gap on ES. Since ES is a leading pair, I expected it to hit it first, and then get a short as long as we have some type of internal target in this leg. Instead, and also because 10 a.m. was right about to open when this was happening, I want to see 10 a.m. remanipulate. So regardless, is not something I would have taken. So at this point, I wanted to see us build up structure, make an internal target for me to use, and take out this high on ES. And instead, if you just look, chopped. Everything was chopped. We never ended up hitting that hourly gap within my time frame of 9:30 to 11 a.m. Even now, I don't think we're still just going sideways. So that's how I avoided the chop. That's how I avoided the bad price action today. And just a lesson, this is why you should not trade with a TP or like use a draw as have your draw be a low that just swept another low. Like if this was here and then we also like came up, built up some type of structure like a low resistance liquidity or an equal low or an unfilled gap, then we still have reason to come back down here. There is still that internal target, that internal draw that needs to be taken out. Or if this low wasn't souped, it was like souped. What souping means, it's like turtle soup, ICT concept. It's when you have a low and the low gets wicked and then it gets closed back above. It shows that like it instantly reacted from it. It's not like we like had some closures below it or something and then reversed. No, it's just like straight wicks it, just like here, wicked it, closed it back at it or above it. It shows a strong rejection. That's what we got here. There was a strong rejection with this low, and then SMT with this low, and Q did not take it. And trying to short back to it with that being my only target would not have been smart. That's why I avoided that. Also, another thing that has been helping me was, as you can see, I have alerts set. I don't know why it doesn't show, but I had alerts set for this high, this hourly gap, and this low here. And what that helps me with is when I'm just sitting there for an hour and a half straight, because I trade from 9:30 a.m. to 11 a.m. When I sit there for an hour and a half straight, looking at every single candle print, it gives me some type of like, it makes me overthink. Like I see something like this. I see we had a perfect reaction off of this high. I would have started like overthinking it, like, oh, is this a good entry? Do I take this? Do I not take this? When I know that this is not a higher probability area for us to reverse from anymore because ES is about to take these highs and this was already souped. So what I do instead is I set my alerts at the highest probability areas, and then I just click off the charts. I like tab out, go watch YouTube or something, and then when that alert gets hit, it gets like, I hear a ding on my computer, it gives a notification on my trading view on my phone, and then I can tab back in. So I don't have to sit there guessing and overthinking in the moment, right when I'm about to enter, whether this is a good spot to long from or a good spot to short from. Is this the high that we need to take? I can just figure it out in advance with no pressure because it's like pre-market. Put the alerts on and then not even have to look. That being Once I tab back in, I already know what I'm looking for. I already like mapped it out. I don't need to think. I just have to tab in, see how the structure looks, see if I have an internal target, and then enter or not enter. Wait for my entry model. If it's there, enter. If it's not, don't. So that's just what's been helping me a lot. It is something that in the past, like especially the end of last year, in November, or like October, November, December, even in January a little bit, prior to when I started the series, it caused me to take a lot of losses because I wouldn't be, you know, shorting or longing from the highest probability areas. And now I've fixed that problem, and that's why I've, especially in this bad price action, reason my trade frequency has been so low is because if you look at this time frame, 4 hour, let me go on like NQ1 so you could see all of the past price action. You look at this 4 hour area, we've just been stuck in this sideways accumulation since, what is this, October? And coincidentally, October is when my trading started to slow down. Like in September, I was getting 1 to 2 trades in a week. And then October, I think all of October, I didn't take any winning trades at all. It was all break evens for all of October. Maybe 1 loss and like 4 break evens. And then November, I took a lot of losses. December, I ended up getting a payout. But we've just been stuck in the sideways range without any type of obvious draw. Like, anytime that we start getting closer to a low, we just edge it, don't actually hit it, start rejecting, get close to a high, reject it, never hit it. So we're just stuck in this sideways range. Now, as soon as we break out from this range, whether it's breakout lower or breakout higher, that's when the good price action comes. That's when I will have a better trade frequency. That's why I'm not worried about it. You know, regardless, these aren't good conditions. Higher time frame wise, nothing in here is clear. Equities aren't clear. Like if you're a swing options trader, a long-term like stock trader, nothing here is clear because it's all just sideways. You would want to wait for it to go a certain direction. And why would you want to be trading? For me especially, I need the higher time frame clear to be clear for me to be able to trade on the lower time frame. I need both aspects to be clear. If one isn't clear, there's nothing for me to take. Higher time frame hasn't been that clear. That's why there hasn't been much for me to take, because I'm waiting for obvious setups. And I know that that patience will pay off in the long run. Because like now on prop firms, it's nice to have a higher trade frequency because everything is based on, like you have benchmark days, you need 5 $200 winning days to be able to pull out a payout, blah, blah, blah. But the real like high tier traders that have been trading for a very long time and make a lot of money, their trade frequency is very, very low because they trade on a live account. They have no pressure to have any type of benchmark days on a prop firm. And they have made their models with experience that they've gained from being in the charts for a long time to have a very high win rate. Although the trade frequency is very low, let's say they have an 85% win rate, 90% win rate, something like that, they can risk higher on their trades, knowing that, okay, even if it shows up once a week, or like on average shows up once a week for me, or twice a week, I can risk way higher on this because the odds of me going on a losing streak are lower since my win rate is high. And they can preserve capital, they can preserve their mental capacity, not trying to sit there every single minute, every single second of every single day looking at the charts, because they know exactly what they're looking for and they have no pressure to do anything else because they have the capital. So you have to think like, oh, right now, for example, I'm desperate for money. Anyone as a beginner trader obviously is desperate for money. That's why they get into trading. But what would my future self, who is on a big, like, high balance live account, what would my future self be doing? How would he be trading? He or she? How would he or she be trading? Like, how would my risk management be? And then you just have to be like that. You have to do the things that your future self is doing, because that's how you become your future self. So that's just how I'm going about it. It sucks being patient, but I know 100% that it will pay off. Every time that I've stopped being impatient and went like stupid, breaking my rules, I ended up blowing a lot of evals, not even being able to get back to funded stage. That's what happened in January. I think I blew 4 funded accounts at the end of December. And then in January, at the start of January, or like first 3 weeks of January, blew, I think, around 6 evals. So that made me lose around $400. And that sucks. You know, no one wants to just lose $400. Didn't pass any of them. I don't think I even won a trade on any of them, because I was just taking stupid trades, thinking in my head, oh, the probabilities, blah, blah, blah. But then I ended up screwing my bank account, and it screwed my mental, my psychology when it comes to trading. That's why I took a week off. And right after that week off, that's when I started this channel and started posting on here and documenting it and keeping myself accountable. And that was my goal with starting this channel, was to do that. And it's been going well. Past 2 weeks, been trading like rules-wise, following my rules-wise very well. I've only taken 1 trade in that time. It was a loss, but it was a great loss that I would take 10 out of 10 times, and I'm sure that it would hit 80% of the time, 70% of the time. And so I'm not upset about it, because losses are required for a winning statistic. And yeah, that's just how I've been going about it. And once again, I'm happy with how I traded today, or how my performance was on the charts. And I count it as a winning day. Winning days should not be counted as whether your P&L was up or down, because you can break your rules and have a green day, but is that really a win? No. A winning day or a winning action is something that gets you closer to your future goals. Breaking your rules doesn't get you closer to there. Taking a bad trade doesn't get you closer to there. Following your rules, however, even if you have to be patient for a very long time or you're not really getting any trades in, is a win. So I count it as a win, and I've been winning for the past 2 weeks, and I'm happy about it. So once again, I'll be back tomorrow. Same thing. If I take a trade, I'll review the trade, break down the entry and all that, my idea. If I don't, I'll make another market review like I did today. And yeah, if you guys have any questions, leave it in the comments, and I'll be happy to make a video about it or reply to it or explain it. And see you guys.